I, in my entire career, have rarely seen anybody who is a successful short-term trader over an extended period. It just doesn't happen. It's a very different market. Against the machines in this market, I see very, very, very few. That's the issue I've got, is like, I don't think trading works for most people over time, unless you change your time horizon. And I know most people don't want to hear that, but that's the reality. I don't think trading works. I don't know what investing is like. We don't know what jobs we're going to do, but we're going to have massive economic growth. And I do know that we're very adaptive as a species. We'll figure stuff. And we'll figure stuff in ways of making money, ways of being human and stuff like that. But we don't know what that is. If I know that we're about to go through the largest change humanity has ever gone through in the shortest period of time.
The markets just sent a brutal warning. After Donald Trump announced a 100% tariff on Chinese imports, global stocks plunged, with the S&P 500 dropping nearly 3%. Tech shares were hit hard, and fears around regional banks deepened the sell-off, wiping out billions in value. What started as a policy move quickly turned into a global shock, exposing how fragile sentiment has become. For retail traders, this crash revealed an uncomfortable truth: human emotion and outdated strategies can't compete with today's machine-driven market. Algorithms now process headlines and execute trades in milliseconds, leaving manual traders behind. Those still relying on intuition or chart patterns are fighting a losing battle in a system that moves faster than they ever can. Macro strategist Raoul calls this more than volatility, it's a structural reset. AI-powered trading systems don't just follow trends, they create them. The market's logic has changed, and traders who fail to adapt risk being left behind. In a world ruled by algorithms and speed, hesitation isn't just costly, it's fatal.
The idea that I've had in my mind is my job is to live in the future. That's what macro guys do. And I got to a point, because of AI and robotics, that I can't see beyond about 2030, 2032. And that's unusual for me, because I use mega trends as the backdrop to what I look at, things like demographics. So when you look at demographics, the population is aging pretty much in every major developed country in the world. So that means economic growth slows as people get older. So GDP growth is driven by population growth, productivity growth, and debt growth. So as population ages, you get these big mega trends that start affecting growth rates of things, and we offset it versus debt. So we've got these mega trends. We've been debasing currency, printing money to kind of offset this massive debt because of the aging population that's slowing growth, and the governments try and keep growth up by creating debt. But soon we're going to replace that equation, because the population side is going to be replaced by AI and robots. So we can have infinite number of productive units population in the next 10 years. So what does that do to economic growth? Who does it accrue to? But we get even weirder outcomes than that. Is, obviously people like, what job am I going to do? What's the point of a trader when you've got an AGI that can do it better? What edge do you ever have? How do companies get priced in markets once you've got this super intelligence? Because don't forget, for the first time in all of history, we will not be the super being on the planet. Somebody will be much smarter than us. It'll be the AI. So it's going to be better at us at all of these mental tasks that we do, and faster than us. So it becomes a strange world where I don't think trading works. I don't know what investing is like. We don't know what jobs we're going to do, but we're going to have massive economic growth. And I do know that we're very adaptive as a species. We'll figure stuff. And we'll figure stuff in ways of making money, ways of being human and stuff like that. But we don't know what that is. If I know that we're about to go through the largest change humanity has ever gone through in the shortest period of time, i.e. not being the apex of all intelligence, I mean, it's a mind-blowing concept. And you can create infinite amounts of these super brains or super bodies. It's like the only way to really prepare for that is to not care. And the only way to not care really is to have made enough money that your security, you allow yourself to be secure, and then you can enter that world, because you can take risks, you can learn, do different things. But if you're expecting to be doing what you're doing today in 10 years' time, you're so wrong. And so really I've looked at this and said, okay, we've got these massive megatrends, crypto, technology. They go up over time. They're the fastest, crypto particularly is the fastest growing asset in terms of performance in all human history in the shortest period of time. So don't this up, take that opportunity and use it because if not, you're going to regret it. So I always talk a bit about your future self, and will your future self thank you for what you do today? You're trying to set your future self up to be protected from the new world that comes. So let's say you've got a reasonably fast moving asset that's proven and is towards the Bitcoin end of the risk curve. Then you know over time that your best bets are going to be to try and buy the dips and then flip them out when it makes new highs, because you've got the skew of the market's directionality. I understand why you came for the 100x, and that's a statement about what you want out of your life. That's okay, but really, you can make your life a lot easier if you truly are trading to make money. A lot of people actually just trade for the adrenaline. It's gambling at that point. And you have to be honest with yourself, is why am I doing this? Am I doing it because it makes me feel something? Am I just betting on the horse racing or whatever it is? Or do I actually want to change my future? Am I doing something my future self will thank you for? It's not going to thank you for that, because 99.99% of people don't make any money out of that. But it's fun. I get it. So what I've always had is this kind of don't this up thesis, which is like, if you're going to do silly stuff, do it with 10% or less of your portfolio. And 90% or more, you put it in the highest quality names and let the trend work for you. And it's so hard for people to have a longer term time horizon. Because also when you go on crypto Twitter, which is where everybody hangs out, it's all about short-term trades, P&Ls. It's the top, it's the bottom, and all of that stuff. But then if you think about it, you just think, okay, so I've got this long-term trend. I'm going to put some of my capital into that. I would put 90% in, but you want to trade. I get it. So then put 50% of your capital in the long-term trend. So that's your long-term book. Leave it aside. You got your punting book, which is 10%. The middle, you say, okay, I want to swing trade. So what you can do is then say, well, if the market is skewed in an upward direction, then I'm going to buy dips and then flip out and look for the highs, never short the highs. Why would you short the highs in the fastest appreciating asset of all time? That's just ego at that point. So then now you've got a system that is simple to explain to yourself. And then whatever indicators of using technicals you want to use, whether it's oversold RSIs or whatever indicators you use, it's really simple because you have one thesis that the thing's going to trend over time. You've got your long-term book, you've got your short-term punting book, and the middle you can swing trade and try and capture the trend. And then you can analyze the three different books. If you're really good at what you do, stick it into ChatGPT and say, tell me about the three portfolios and how am I doing, rates of returns, risk reward, stuff like that. And you'll have a great understanding of how to improve your trading. Now, for me, I've gone completely out this end, which is like, I don't trade at all.
Yes.
I mean, I really don't. Yes, in some equity stuff, I will buy calls and stuff like that. But I'm like, I don't need to do anything. I just need to analyze the trend, how long is it going to last, and choose the best asset. Because they're all being driven by this one dominant macro factor. And this is the key to everything I'm doing right now. As I said, I used to run these broad diversified portfolios, hedge fund portfolios. And now I am ultra concentrated, irresponsibly concentrated. But it's not irresponsible because it's come from a lot of work, which is I found out that the printing of money to pay for this aging population, to pay for the debt that's been accumulating, they've had to print money and that debases the currency. So that means there's more and more currency every month or whatever. And what that actually means is the value of the purchasing power of the currency goes down versus scarce assets, equities, crypto, housing, all of that stuff. That's the kind of dominant factor. But it's so dominant that it explains 97.5% of all the movements in the NASDAQ over the last 12 years and 90% of Bitcoin. So you've got the single most dominant factor in the history of markets at play. So you only have to look at one thing, really. The rest is noise. It's like, are they printing more currency? And therefore it makes all the numbers go up, except really cyclical stuff, oil and stuff like that. But generally speaking, it does that. So then if everything is being dominated by this one macro variable, then all you need to do is what is the fastest horse? And how I do that is I divide one asset by another. So I'm looking for what's going to outperform Bitcoin because that's the benchmark asset. And that's what got me into Solana in 2022, 23. The chart pattern looked like it was going to base and there was a good chance that was going to work. And then my switch from Solana to Sui, that did the same thing. And it's just idiot proof. All I'm doing is just looking, if everything's being driven by the same thing, by the fastest thing, that's not too far out the risk curve. That's it. And so you don't have it's going to go to zero risk with those assets because they're proven large assets. And that's the best way of capturing it. So that's all I've done. So since 2022, I've made 2 asset allocations, which is a switch into Solana at the lows, and then out of Solana into Sui, and that's it. And I've also do a bit of the punting for the fun because your friends you're seeing on crypto Twitter all day. I looked at every single one of those kind of highly speculative bets. They all lost money. Every single one. Some of them went to zero. The rest of the book, amazing.
The recent market crash sent a clear warning. After Trump's 100% tariff on Chinese imports, global stocks plunged, tech was hit hardest, and billions in value vanished within days. This wasn't just panic, it was a shift in market dynamic. Raoul Pal says we're in a structural reset where AI-driven algorithms dominate trading, reacting in milliseconds while humans lag behind. Old strategies based on gut feeling or charts no longer work. In today's market, adaptation isn't optional, it's survival.
Now, the issue is most people don't start with any capital. That's the hard thing. And so that's why everybody looks for the 100x, because they don't have any capital to start with, because people's wages are not high enough compared to the cost of living. I totally get that. And then that forces you to go out the risk curve to get any capital. I understand it. But if you do get any capital together, I'd rather you did a second job and put that money into trading than just go out too far on the risk curve and miss the opportunity set. Because the opportunity set is the longer term thing. So if you've got a second job or a third job, do whatever you can using your skill set where you can make a bit of extra money, stick that into your investing book. And I know at first it feels stupid because you've only got £100 or $100 in that book and 300 in that, and you feel like stupid because you see everybody on Twitter throwing around $1 million. It doesn't matter. You'll get it over time. But if you keep trying to get the 100x, you'll never get past the I'm paying my bills at the end of the month idea. And I know that is the hardest thing, starting from nothing, getting somewhere. It is really, really hard. In crypto markets, the other risk that you're going to go down is you're going to use leverage because it's so available. It's so available and it's much easier than trading futures. It's just so there. You can use it intelligently. So maybe you juice your returns, but I'm talking about 2x or 3x leverage and not 20x, 50x, 100x, because that's back down here where the probability of losing all of your money is about 90% or 95%. I, in my entire career, have rarely seen anybody who is a successful short-term trader over an extended period. It just doesn't happen. The best I ever saw in the short-term time horizon was Paul Tudor Jones. He was pretty good. Most people can't do it. Steve Cohen was good. Most people can't do it. Simply can't do it. And there's very few rich traders. There's some legends that came out of the Chicago pits. But they also had informational advantage. You'd see the hand signals, you see the orders coming through, you can front run. It was a very different market. Against the machines in this market, I see very, very, very few. So that's the issue I've got, is I don't think trading works for most people over time, unless you change your time horizon. And I know most people don't want to hear that, but that's the reality. And I've seen a gazillion traders. I've employed several of them. I've seen them. I've seen the hedge funds come and go. Most people can't short-term trade. Bitcoin, lots of people, lots of value. And I looked at that for all crypto, and they all actually follow the same path. It's like the number of active users and the total value. So it tells you that price is almost perfect in assessing Metcalfe's law. So if the price is outperforming, it tells you the network's gaining value. So it kind of works. So that's why I took that bet, because you have the fundamental information of this is really high quality people. They've done it before. They've got some of the world's best cryptographers, blah, 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 all there. They've got a new thesis, which is to build out the entire internet, and the price is moving. A little financial markets point is, again, online people FUD it, say it's a low free float. A lot's held by the foundation that I sit on, and VCs like A16Z invest in. There's a FUD that goes around. It's like they're going to dump on you. They're not. Everyone's a long-term holder. But in a bull market, something with a low free float and a large amount of capital chasing it, just goes up more. There's less of it around. Now, in the down market, it'll come down more. But I'm like, guys, this is obvious to me. If you've got a low free float, high demand, high attention opportunity, it's going to outperform everything else. What it's saying is, at this stage, early stage tokens move faster. And so if it's showing network adoption, even though Solana's an amazing project, I love it, it's moving super fast, the chances are it will outperform. So my use of capital should switch into the fastest horse. Also, you can actually go back and look at like Solana previous cycle and then look at Sui or Ethereum the cycle before. They all kind of look similar style of things. So it gives you extra signal in that. The main cycle we look at is this observable 4-year cycle. And that is driven by actually the debt refinance cycle going back to 2008. People think it's to do with Bitcoin itself. It's not. All assets are doing the same thing. It's the same as the business cycle. It's the year-on-year rate of change equals the S&P, it equals the ISM. 2008, everyone reset interest rates to zero. After several years, rates were allowed to go up, but everyone had reset their debts to this 3 to 5 year sector. It creates this perfect 4-year cycle. Our analysis this time suggests that it might stretch by another year. People think it's preordained that it's 4 years. It's not. It's actually because they've actually extended the debt cycle out to 5 years right now. So we think it might extend. But that cycle's not going away. It's the same cycle that's driven the NASDAQ, Amazon stock, Tesla stock, the same cycle that's driven oil prices. I mean, you name it, it's the same thing. So it's there and observable. You can use past parallels, which is interesting, why we use a lot of past parallels. I grew up on that because of Paul Tudor Jones and his famous 1987 crash thing. And a lot of the time, it goes wrong just when you want it the most. But sometimes it gives you contextualized information.
Raoul Pal believes the biggest edge in markets is thinking long-term. While hedge funds chase short-term gains, individuals can plan years ahead, crucial as we approach what he calls the economic singularity, where AI outpaces human traders. He urges building capital now through disciplined investing in quality crypto assets like Bitcoin instead of gambling on short-term trade. Pal warns against quitting your job to trade full-time, calling it a fast path to ruin when volatility hit. True strength, he says, comes from stability, steady income funding long-term positions that grow over time. Do you believe long-term investing still wins in an AI-dominated market? And are you preparing for the changes ahead? Share your thoughts in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.